Hi, Ari. Thank you for coming onto Under the Paycheck. I have here owner of Rastegar Capital, linking credited investors with real estate portfolios. Now, I find this fascinating because it gets people into real estate without really getting into $500,000 in debt. Personally, I'm in Los Angeles, so it's more like $1 million to $2 million in debt, but you have a lot of work ahead of yourself.
Yes, I'm a fairly busy guy, thank God. And not all debt is bad, by the way. Not all debt is created equally, which might be for another discussion, but credit card debt is not necessarily the debt you could put on a piece of real estate that you're renting that's making cash flow. So there's ways to kind of unpack what that means too, maybe on this call or maybe another time.
From my understanding, I did do a little bit of research on Rastegar Capital. In order to be an investor, one of the minimum requirements is to have at least $50,000. And with that, if I am correct, with that, people are possibly getting around a 7% return on their $50,000 investment. Am I
Well, I
like totally
appreciate
off?
I appreciate you doing your homework. That's really
Thank
great.
you.
Well, the cash in part is, yes, the minimum cash accepted is 50,000. Our investors are mostly public pension plans, insurance companies. But the thing about individual investors is you must first be what's called an accredited investor. An accredited investor means that you have a net worth of at least $1 million, not including your house, or make over $250,000 a year in income for 2 consecutive years. So until you meet that requirement, you're not allowed to even invest the $50,000. So that's the first parameter that I think is very, very important. And if you meet those qualifications, with your SEC qualifications, then you would be permitted potentially to. And yes, there's certain types of investments that make income. We have income strategies, right now that pay 12% a year that are just strictly income. We have other investment strategies that have more upside that, yes, an investor would get what's called a 7% preferred return, which means before us as the managers would share in the profits in some way, they would make 7% per year. And then in the event that we made profit above that 7, we would then share in those profits in some sort of split. But the initial 7 plus the investor's initial capital return is given to them. Yes.
Now, I'm not a professional or an advisor of any way, but 7% to me doesn't sound terrible. 12% even sounds better, but you only really have maybe like 4 or 5 avenues where you can invest, where you can get property. You can do the stock market. Recently, silver and gold is skyrocketing. I
It
myself
is.
wish I did that last year, and maybe even putting your money towards like your own businesses. But other than that, there's not too many places where you could put your money. There's not too many places, risk free. I know crypto's a thing too. I
Well,
haven't
risk
touched that quite
free.
yet.
Well, I appreciate you laying this out. It's very helpful for people for the way you're kind of demystifying it. And I'm not a financial advisor either. Real estate, private equity, being in the private investment business, I'm a developer, not a financial advisor. So people that are listening that are looking to invest or have money saved up, the first thing that I always say is find a financial advisor. Find what's called a registered investment advisor, a fee only advisor in particular, if you're going to Google it. And that's someone that doesn't make a commission off money you invest. It's people that make a recurring amount of money based upon your total assets. And if they grow, they make more money. If they shrink, they make less money. So there's a great alignment of interest, and a person that's a professional there can look at all of your assets, at your house, at your 401k, at your cash positions. And if they're good, they will begin to do what's called asset allocation, which means they'll put a certain piece of it in gold, a certain piece in the stock market, certain piece in bonds, certain piece in alternative investments, which real estate is. And over time, the best investment is ultimately time. Time is what makes you money, and not losing money, as corny as that actually sounds. So anybody that is starting on their journey and that has gone beyond the initial savings, and Charlie Munger, who was Warren Buffett's partner for many years, said, and I agree with them, saving the first $100,000 is the hardest part. And once you've saved $100,000, buying an index fund or investing in an index fund, which basically invests in a broad spectrum of things where the risk is much lower. But professional investors understand that managing how the downside should be the focus much more than looking at returns or following headlines or, you know, just trying to chase the latest greatest trends, because over time, if you're invested in things that are non-correlated, and I'll give you a simple example. Stocks are investing in the equity of a company, the ownership of a company. So as they make more money, in theory, you make more money with the company and it's potentially uncapped. You can make a certain amount. If they lose money, you can lose money. That's the stock market. But then there's the bond market. And a bond market is effectively you loaning money to a company at a fixed rate of return. And typically over the last 1,000 years or so, bonds and stocks are uncorrelated. So if stocks are going down, bonds go up because they're deemed to be safer. And if bonds are going down in yield, stock markets are going up. And that's just a simple example of when you invest is to be in such a way that you have at least two, three, four, preferably up to eight little buckets that you've put money in that are uncorrelated. So at any given time in the market, like you saw, if the stock market is taking a beating and gold goes up, that little pocket of money that is allocated towards gold is going to do well. So over time, if you're making a 7 to 8, or, if you're lucky enough over time to average a 9% return over 10, 20, 30 years, you're going to make a lot of money. And so I think that the trick is being able to be in the market, so to speak, being in uncorrelated assets for extended periods of time, because that's when compound interest really starts to show its magic and starts to hit a J curve of growth. It's not in the first year, not in the fifth. I would not even really in the fifth, seventh, 10th, but in the 20th, the amount of money that the market makes for you can be quite extraordinary.
Now you're in commercial. That's like the primary commercial space. I have mainly been doing residentials, a couple houses, condos, nothing fancy. And
Well, boring is
now I'm
beautiful. Boring is beautiful, by the way. And investing, usually the super fancy stuff, look too attractive and end up not being as pretty. The more boring, the more beautiful in my experience.
that's what I try to tell people, that after the excitement goes away, maybe like after a year and you've like signed everything, you're like, oh my, I have the house now. I have the rental. That's it. It just becomes like boring in a way. And now there's only stocks you can get or bonds or invest in other things. But once you kind of have all that, you're just trying to maintain it in a way. But
Well,
commercial,
money
yeah,
can be the way that I think. I didn't mean to cut you off. But
yeah.
the one of the ways that I've thought about it over the years is treating money or liquidity. I look at it like an employee. Like I ask it, what did you do for me today? So my job
Oh,
first was to build up the employee base. Each dollar is like a little soldier in your money army. And then over time, you put them out to work. And their job is to go out there and harvest and create yield and bring it back to the fortress. So once you've, as you said, put them in place and you figured out your asset allocation buckets or in your different thing, its job is just to keep making money without you doing anything in theory.
true. Yes, I agree with you. How did you get here? I know that most people start flipping burgers, delivering pizzas. You don't
That
get
was me.
born into having some people do. Some people's parents have multi-million-dollar businesses, but the average person, probably like you and I, we're starting off in retail. We're starting off in hospitality centers. So how do we get from hospitality, retail, flipping burgers, all the way to now running multi-million-dollar businesses, just like Rastegar Capital?
That's a lovely, lovely question. I'm just like you. I'm a regular person. I was delivering pizzas. I was flipping burgers. That was exactly me. I went to two community colleges before getting into undergrad, before law school. I was working on construction sites, and it was exactly in that mold, as you said. And I think there's a few things that go into it in my, singular experience. I don't think anything gets around hard work. Hard work of, someone said the other day, I'm working 40 hours a week. And I kind of maybe a little bit more flippant than I care to admit was like, that's sweet. I also worked a part-time job at one point, and I say that because, when I was in law school, I was literally working a full-time job on the construction site and going to law school full-time and studying and, going through all those things to where the people that, have the to build, as you said, a multi-million or a multi-billion dollar business, there has to be something that pulls you to work at that level of intensity because willpower is very limited. You can only work as much as, you have a lot of willpower, you're doing stuff, I have some willpower. But when you do something for you, it runs out much quicker than you think. So, in my experience, and I've done a lot of coaching work with people like Tony Robbins, I'm definitely, admittedly, a self help kind of person, reading all different books that you can imagine from Think and Grow Rich to Seven Habits of Highly Effective People, you name
Rich
it.
Dad,
There's a
Poor
gazillion
Dad.
out there. Rich Dad, Poor Dad, sure. I think there's so much gratitude for those types of books. And I love the seminars myself is really on the edge and looking to really make a radical change in their life. There is nothing like immersion. If you want to learn a language, if I put you, if you take how many people probably listening to this took, Spanish in high school and, know like 3 words. And they took 4 years of Spanish in high school. Well, I was kind of that person too. But when I lived in Mexico, I went and lived in Mexico for almost 2 years. I came out speaking Spanish, and I'm very fortunate that it's my third language and I speak it, embarrassingly bad at least. But the immersion is what gets you there. And the same with, positive behavioral changes, same with negative behavioral changes. You hang out with the wrong crew for one weekend of immersion, it can throw your whole life off. You hang out with the right crew at a Tony Robbins seminar for 3 days or 4 days, all putting in the right strategies, the right, intelligent outputs, the right state of mind. You can radically change your life for the better, as well. But to get there, you have to, in my, again, limited experience in this one life that I'm leading, having a purpose, having something that really draws you to contribute, to give beyond yourself, will pull you to go do something and get you beyond your tiredness, get you beyond those days, get you beyond the things where you say you can't do it because you're contributing or desiring to contribute at such a massive level, that it gets you past those humps that inevitably happen.
I think we have very similar like backgrounds where I too was delivering pizzas and I went to law school, and one of my first properties that I ever got was because I had student loans left over.
I've been
And
there.
student loans, I had the decision of paying them all back and not having student loans or putting it into a property. I went with the property side, and it's been the best thing I could ever do. But it was such a weird concept of using debt theoretically that was supposed to go for something else, but I always just took it out in case financial aid didn't cover that year or in case something was behind. I
You're a
never
very
wanted to.
resourceful lady. You're a very resourceful person. I mean, that takes a lot of courage. That takes a lot of foresight. Admittedly, I did the exact same thing. In fact, my first development company, I used my scholarship money to buy the first lot. So clearly
I would
that
probably do the same.
yeah, I mean, you clearly have an entrepreneurial spirit, and that's not for everybody either. Like, there's nothing wrong, with not going down that route because you have it takes so much risk, and I believe that it's a risk reward, and the rewards that I've had as an entrepreneur working with thousands of investors and millions of square feet of development and master plan communities and schools and I find it to be wildly fulfilling, but you have to have a hunger. And I think that's one of the things that the reason a lot of the second generation or the third generation, I think, and maybe nothing against them. I have three kids that I'm trying to instill a lot of this stuff into as well. But when you're hungry, you do everything you can to eat. And sometimes the second or third generation, or almost always, they're not hungry. Literally, they have food. They have resources, they have a loving house, they have all these things that maybe we didn't have in some regard, and which I believe to be an incredible blessing. By the way, not at the time, it sucked at the time, but now I see the wisdom and how that created so much desire, so much ingenuity, this incredible thirst for knowledge and curiosity, just because it wasn't there.
So I would imagine you learned a lot of this from law school. What lessons were you able to take away? For me, it probably did the opposite. where now I was afraid of like, because I worked at the courthouse. I would see every single lawsuit. You get 200 cases every morning in just that one county. And it's just like, oh my God, everyone sucks. Everyone's suing everyone. You don't want to do anything. So for me, if anything, law put me a little more fearful instead of I thought it would give me confidence. Like, yeah, I know the law. I know the procedure. No one can mess with me. No problem.
I
Law
think
will
you have a
always be
lot
there.
more confidence than you give yourself credit for. It can
Thank you.
definitely do that because lawyers are trained to think that things are going to go wrong. That's
Yeah.
how lawyers are trained. Entrepreneurs are trained to think that things could go right. So if you
Yeah.
can balance those two things, and I always joke, I have those two Aries that live in my head. One person saying, no, we can't do that. We're gonna get sued. And then the other Ari saying, say, fuck it, let's go do it. We can go make $1 billion. And so to your point, I worked in the courthouse, myself as a criminal defense attorney, owning the
Oh,
stuff
those
that
are
we own.
fun.
It's fun, but my thing about being a lawyer was a lot of times in the type of law that I was practicing, you're dealing with people on the worst days of their lives. And even though
Mhm.
you're helping them, that wasn't a life that I really, wanted to live in some regard. And I have some great lawyers, thank God, that are so much better than me, and lawsuits happen and all these things happen. This is part of life. But if one thing I really learned from law school is the parameters of how things work, seeing that law creates order, how all of real estate, as an example, is a contract. All relationships are covenants and contracts. You do this, I'll do this. Marriage is a contract. The world, a civilized society, in theory, is governed by a set of laws, and so is business. Certainly, real estate is a lease agreement for a tenant, a purchase and sale agreement to buy, a title. And so I took from law school, and I use it, to this day. But admittedly, like you, I think it tempered my enthusiasm a little bit, so that I could work within a framework, think within the structures a little bit. But I totally get that perspective, and I think, for yourself, you have all these knowledge, you've done great things, you're putting yourself out there. I think that you have an appetite for risk much more than the words that you're saying. I mean that very lovingly, by the way. That's a compliment,
Thank you.
because people that take risk are the ones that go out there and risk themselves to help others. And I think that's the most worthy attribute of being a human being, and maybe the only thing worth being a human being.
Is that the biggest mistake you see? We'll say younger people is that they don't take any kind of risk or they don't do anything with their money. Right? I just turned 30 and I've been trying to tell all my friends like just $5 a week, just something, put something into the stock market, save it so that
You're a
you
good
can
friend.
invest out of states because LA's gotten crazy, especially for the standard. You don't want to invest. You just want a little home type of vibe. So I tell my friends, like Michigan, I went out there to go look at properties, beautiful homes for 150,000, 180,000. And you don't have to live there and you can still be in the markets and you can still be in the game, even if LA, where we all live, is out of reach. So I feel like you would agree that the biggest mistake is risk, but maybe you have a different answer.
Well, I don't know. I think the biggest risk is individualized in some way. I wouldn't blanket that way, but I think one of the biggest things that I see is that the great tragedy of young people, or people in general, is not that they aim so high and they miss their goals. It's that they aim low and they hit.
Ah,
What I mean by that is, taking the time to write down where you want to go. Like, that's like, meaning you can't just say, I want to go eat, and then you end up at a restaurant. Like, you type the address into the GPS, and people aren't making a decision or having enough self-awareness to figure out what they actually want out of life. And I think forgetting that we're the creators of our lives And we are the ones that are supposed to create our life, not by default, not circumstances, etc. So as a young person, what I would say is like sit down and figure out, what do you like? What are your strengths? What are your weaknesses? You're allowed to change your mind and write down that destination, because just something in your head of going through autopilot, you'll be a part of someone else's dream very quickly. But if you can write down, I'm going to be a homeowner, I'm going to be a millionaire, I'm going to be a doctor, whatever the hell it is, you want to be a dancer, be a mother, be a father. But writing down what you're doing, I think, has alchemy, and I think has wisdom. And all the greatest sages, all the greatest oracles and philosophers have said this in some regard. The religions have said it. You're a creator. I made you in my own image. I believe there's something so profound about writing physically and reading and repeating where you are going, so that you can get to that place and not just leave it to default. Because if you leave it to default, in my experience, you become a pawn in somebody else's game. And that is, for me, is completely unacceptable.
I agree. I have two final questions because I know we're on a time crunch. To dive in a little bit, because this is under the paycheck, it is a little bit difficult because you're an owner of a total capital firm. So is your income stable or fixed? You yourself.
Is it stable or fixed? What does that mean exactly?
For example, I have a furniture company. I can have an average of possibly 5,000 a month, but that is not
Uh-huh.
guaranteed. Some
Oh
months I'll
yeah,
have
no, not
three.
no. When you own your own business, there is nothing that is guaranteed. I mean, there's been times, and some of the biggest times of the business, that my Amex is still getting declined. So so that's the joy of being an entrepreneur. And there's times that we've had very, very, very big years where it's not numbers, it's multiple commas, if you know what I mean, in the accounts.
Okay, yeah.
And so being an entrepreneur, certainly it's been my 11th year in business. There is nothing stable. There is nothing guaranteed. And for the record, the other thing too is about investing. And I know this might sound obvious, but nothing is guaranteed in investing. Nothing is guaranteed in life. Anybody that says that to you is selling you something. You go get hit by a bus today, and
Mhm.
and so, there is technically a risk-free investment by definition, which is the US Treasury, which that's up for discussion now too, with $38 trillion in debt. But, we can unpack that another time. But you
Ugh.
have to take some kind of risk to do anything. And you're going to take risk. Walking your dog has a risk. Drinking tap water, some people would tell you, has a risk. So meaning you're already taking risk as an individual. So I would implore you to take some self-reflection, to make some calculated risk towards what could be your dream or your goal or your objective, because you're already taking risk anyway. You're already doing things. And to me, in life, you're going to experience a certain amount of pain no matter what. That is, we have, neurology for, we have pain receptors. But the pain of discipline, I believe, weighs much less than the pain of regret. And when you talk to people, and you talk to people on their deathbeds, and you hear these stories or whatever, most of the regrets are things people didn't do, not things that they did. So my imploring
Yeah.
to the younger generation, or people, older generation, 60 is the new 30. Get out there and just fucking go do something, and write down a destination, figure out a place you want to go, set a standard, set a goal that's higher than, that you think you can do, that scares you just a little bit, and go do it. And chances are you're going to hit it, just like you set something that was low and you hit it. You have a track record of achieving your goal. Your goal was just too low of a goal.
I agree. Thank you so much, Ari. Where can everybody find you? Where do you want people to find you? And of course, I'll have all the links out and in the
Yeah, of
descriptions.
course. I mean, you can find us on all the social media platforms, LinkedIn, @Rastegar Property on Instagram, @Rastegar. Instagram is my personal. You can look up Rastegar Capital. It's pretty visible, the stuff that we've done. We have all sorts of investment opportunities. You could read my book, which is called The Gift of Failure. You can find it on Amazon. It's not the great American novel, but hopefully it's worth the $5 on Amazon. You can listen to it on Spotify or Audible. I did the recording myself. But yeah, thank you so much. And I hope we get to see each other in person.
Thank you so much, Ari. I hope you have a good day.
Talk to you soon.